accompanying us in our Bengaluru special Inside Bengaluru, which we are celebrating all through this week. Good morning, Bala. Thank you very much for joining us. We have questions for you, for your political avatar, for your CFO avatar, your startup investor avatar. We have lots of questions for you. But first up, let me start with the numbers that came in yesterday from Infosys. Are you getting a sense that the IT sector itself will be able to meet the challenges of social media and digitization? Now, is it a bet that you will take on the IT space itself?
No, I think the IT industry is going through a big transformation. If you look at the incremental spending from clients, most of it is in the digital area. The legacy business is only coming down. That is why you don't see a big growth in IT spending of large corporations. They're allocating more and more money on the digital space. So I think there is a challenge of managing the legacy business, which is getting more and more commoditized, while at the same time leapfrog into the new technology like digital, where it requires a different kind of talent, different kind of doing business. So I think that is where the IT industries will have to make the change, because the first 100 billion for the industry came purely from services. The next 100 billion is going to come from digital products, IPs, big data, cloud, and all the other new technologies. So they have to make the leap change. That is going to take some time. It requires a lot of investments, and being in the public market and making the change is going to be a big challenge. So I think there is a challenge, but if they play it well, I think they'll be able to manage it.
Okay. Bala, hi, morning. That point is very well taken, and we'll discuss digital in greater detail in a bit. But before that, I just wanted your thoughts on Infosys itself. You know, the company was going through a tricky patch in the last 1 year with a lot of organizational changes. But now at this point, do you think that this volatile period of transition is now behind the company, and we could see it embark on a phase of execution under the leadership of Vishal Sikka?
No, I think a new management has come, and they are working on the new strategy. We have to wait and see whether they are able to execute the strategy well. No, generally, if you take the IT industry, they have to manage the impossible trinity. The impossible trinity is the billing rates, the revenue growth, and the margin. When the business is getting more and more commoditized, it is very difficult to manage this impossible trinity. One of it you have to give away, and you have to reinvent your own model. You have to disrupt your own model when the market is changing so fast into new technologies. There is no clear example in the corporate world where somebody has come and disrupted their own business and became more successful, that too being in the public market. So I think there is a huge challenge. The new management has come. They have given the vision and the strategy. We have to give them some time to see whether they are able to execute on the strategy well. It's too early to say. Okay.
So, as an investor, would you put money in this space at all? Are they showing that much promise at least?
No. See, look, there is a huge legacy still sitting in the world, right? That is not going to go away. And if you play the legacy business well and run it like a Walmart model, run a more efficient model, probably you'll be able to still grow and make some money. While at the same time, you have to make investments on the new technologies. You have to do both. And most of the things in the new technology area can't be done internally. You have to buy it from the ecosystem. So I think a combination of this with good leadership, you should be able to make it, but the stacks are against you.
Okay. You did mention this impossible trinity of billing rates, revenue growth, and margins that companies have to, balance. But do you think the top-tier companies in the listed IT space have it in them to manage this for the next many quarters? Because some of them, like TCS, look like at this point they could be in a tricky spot.
No, I think whether TCS or Infosys or Wipro, they all are going through the same challenges. Because earlier, the growth was something around 30 to 40%, and the ability to grow the business without compromising on the bill rates or margin was very high. When the growth rates have come down to single digit, maybe high single digit, your ability to manage these three is very limited. So you have to give up one of these to get the other. So it's very difficult. I mean, If you look at the numbers of all the IT companies, the margins are not changed, even though rupee depreciated by close to 20-25% the last 2 years. So most of the benefits of the currency had been passed on to the client, and still the growth is not coming. I mean, the growth is still maybe high single digit or slightly higher double digit, and that is coming down to high single digit. So I think there is a huge challenge, and one of it has to give up. I mean, the price points are already coming down, and if it results in higher revenue growth, they should be comfortable. If it is not, then you have a challenge.
Yeah, that's the point, Bala. You know, until now, as you said, one had looked at IT companies as the 30-40% growth guys. You could take 1 or 2 years of slow growth, but should the investor mentality now shift to a 10% growth industry?
No, look, earlier IT industry was a high growth industry. Now they're becoming more like a value stock. They'll be valued more on the dividend yield and the buybacks they do, or the amount they transfer to the shareholders. If you look at the US companies, whether IBM or Accenture, they figured this out. They clearly know that they're becoming more and more of a value stock. They're returning more and more money to the shareholders, and they're able to maintain their EPS in spite of the lower growth, because they pass on a lot of money back to the shareholders. US is an economy which returned close to $1 trillion to shareholders last year. So Indian companies have to change the mindset. They're no more a growth stock. They're more of a value stock. They'll be valued more based on the yield and the buybacks they do. So I think that transition has to happen both in the minds of the investors and the management.
Okay. One element that has been very stark this quarter around, Bala, between Infosys and TCS is the attrition levels. For Infosys, we've seen attrition levels fall substantially under the new leadership perhaps, while in TCS you're still seeing employees leaving in droves. What do you think each company is doing right or wrong, and how do you tackle a situation like high attrition?
I think attrition is not a data we should follow anymore in the IT industry, because if you look at the first 100 billion for the industry, it came with 3 million employees. Maybe the next 100 billion of revenues for the industry will come with maybe 1 million employees. And the addition of employees in the IT industry is coming down. I was told already it is only 60% of the campus hiring the IT industry did when compared this year, when compared to last year. So I think the net addition could become negative in the next few years. So I don't think attrition is a good measure for the IT industry, because when they improve productivity, when the business is getting more and more commoditized, when they operate on a very high utilization levels, I don't think attrition is a data which we should target.
Well, that's very useful as an investor indicator, but not very useful if you are following Bengaluru city, if the city is not going to generate jobs for the IT space. What about the startups? Is there a new wave of wealth creators that we can look to? Which space would that be?
No, startups are a new case in the game. I mean, they are playing in the new technology, and they are doing a lot of interesting stuff. I mean, if you look at the kind of technology they are building, they are putting more money into the hands of people by getting the assets more and more productive. What is Ola, TaxiSure or Uber? They are trying to make your asset sets more and put more money into the hands of the drivers so that they can become entrepreneurs of their own. So I think startup ecosystem is building very well. The next 100 billion for the industry could majority be built by the startup companies, because they're solving basic problems, either as consumers or customers, and addressing the business problem which will help large corporations to grow their revenues and become more profitable. So I think in Bangalore, earlier, if you will be a respectable bridegroom, if you say you work in the IT industry, now the new zing thing is startup. If you say you work in a startup, your value goes up and you will become a more eligible bridegroom. So I think startups are changing the way the world of technology works, and startups are the game. They are going to be the biggest value creator in this country after the IT industry.
Sounding very positive. Now let me ask you about the bank that you are planning to start. Have you heard from the Reserve Bank? And more importantly, will you be able to make a mark? Why should you stand out? A lot of the private sector banks that reported numbers are getting troubled with bad loans.
No, we applied for a small bank. Reserve Bank asked us some details. We have provided. We have not yet heard from them anything. I think Raghuram Rajan said probably the RBI will issue new licenses in August. So we have to wait and see. No, I think the technology usage in banks has increased disproportionately outside India. India, the use of technology in bank is still limited. And all the banks in India have got too much of legacies. I think the interest rate which they charge to consumers, it's at least 2% higher because of the NPAs they have. So if you start a green field with no legacies, and if you use the technology to the ultimate and make sure you improve the consumer experience, I think you can make a large differentiation in the banking space. I think a greenfield bank with no legacies, using more and more technology, can make a huge impact in the banking industry and change the way the banking is being done in this country.
All right, Bala, we leave it at that. We look forward to that, though. Let's hope that it's a new sunrise from startups in the banking space. Thank you very much for joining us and enlightening us on both the legacy issues in the IT space and the new sunrise that the startups might come. Thank you very much for joining us on Bengaluru, Inside Bengaluru.
Actually, Bala made a very interesting point about startups and is actually putting his money where his mouth is, because he is putting together over $150 million in private equity investments to pump into startups, not just in India, but elsewhere over the world as well.